think a lot of the deals that we're seeing are people that are kind of caught up in this rising rate environment. There's still some distress out there in the marketplace, and you can take advantage of that if you have the ability to raise capital or have investor backing you. But
Brad, thank you for coming to the show. I really think that raising capital right now is going to be an interesting process. So I appreciate you taking the time to come on today.
You're very welcome. It's a pleasure to be here.
Now, you've been raising capital for 30 years. You've raised over $2 billion. Why don't you give us the rest of your, I know you're an author as well. And why don't you give us the rest of your background?
Yeah, I basically been raising money professionally now most of my adult life. We grew up in a middle-class family, and I actually ventured off to college to become an architect. And while I was in school studying architecture, kind of took a turn, ended up working for a very small oil company that hired me at the age of 21. And they taught me a system and gave me structure to really get out in front of high net worth individuals and how to build trust, build relationships. And while I was going to school, I was working for them part-time, but quickly realized there was much more money and much greater opportunity raising capital than graduating with an architectural degree. And so I parlayed that into a job with the second company, doing exactly the same thing. But unfortunately, through one of the investors that I had cultivated who was in the industry, the oil and gas business, we had uncovered some fraud and misrepresentation. And so, not wanting to be any part of that, I immediately resigned. And we filed a class action lawsuit, which we had prevailed. But the investors turned to me. We were doing this all by telephone back in those days. Didn't have the internet, didn't have Zoom. And I don't think they really realized that they were talking to a 23-year-old. And they said, well, what are you going to do now? And I just saw this huge opportunity open up in front of me where I said, I can always go back to school. But it sounds to me like they want to back me. And so I literally created some business cards and printed up some letterhead and launched an oil company and built that up over the course of about a decade, with the right team, brought on a securities attorney as outside counsel, an accountant, and went out and got a petroleum landman, and really just there raised millions and millions of dollars by hiring a team of people. Well, as you may or may not know, in the very late 80s, 90s, two major things really changed that industry. One was the Tax Reform Act of 1987 that took away a lot of the tax incentives. And then the other was just collapsing energy prices because OPEC was in much more control then. And so, kind of reading the writing on the wall, I slowly just collapsed the business to the extent that one day we no longer existed. We never had to file for bankruptcy because we were completely debt free. And then I just kind of floated around like a cork in the ocean for about a year. We lived off savings and really tried to figure out what's the next chapter of my life going to be and what will that look like. And ultimately just realized, I guess the best thing is better go back to school. You can't get a job without a college degree. And so I actively re-enrolled, came out with an honors degree in finance, and went off to try to get a job in the corporate world. And it was really surprising and kind of disillusioning because people definitely wanted to hire me, but they wanted to pay me what I used to make in a good month for a salary. And so I said,
Sure.
Not wanting to go backwards in life, what do I do next? I looked at becoming a doctor, looked at becoming an attorney, actually took the LSAT, found out very quickly I'm not so good with standardized tests. And so one day it dawned on me, like, man, my hard skill, like the one thing I really know how to do better than most of the people I've met, and certainly have trained a bunch of people, is raising capital. And so I went to work basically professionally as a capital raiser for some of the world's largest corporations, firms like ING, which at the time was, I think, the second or third largest financial services firm globally. Then I went to work for Allianz, the huge German insurance company, raising millions for them globally. And then I moved over more to the real estate side of things, which is where I was for many years, raising literally hundreds of millions of dollars for people for real estate syndications, real estate investment trusts. And then ultimately just kind of went into retirement a few years ago. And, sitting at home in retirement, I get bored fairly quickly. And I said, man, there's still plenty of years ahead of me. This solves a major problem for most business owners and entrepreneurs. Like, I believe raising capital is a skill that they need that most lack. And so we launched our educational and mentoring platform a few years ago, and it's just been unbelievable. We're in 28 countries around the world. It's literally opened doors to me that I thought would never be open. I've shared stages with some of the most famous people on the planet, like John Maxwell, Floyd Mayweather, Shark Tank's Kevin Harrington here in a couple of weeks. Be sharing the stage with Jordan Belfort, Elena and Grant Cardone, and Robert Herjavec. But it all falls back to raising capital and having the skill set and, more importantly, the experiences to teach people how to do this, but do it the right way, because so many go out there and do this not realizing that they're in the securities business, and then they make mistakes.
Now, how has the mindset changed over the last couple of years of these people raising capital? Obviously, there's been a change. What are you seeing in the marketplace now to what it was like 3 years ago?
Well, through the Jobs Act and through the changes that have taken place, it's actually become considerably easier. We can solicit for investors, we can advertise, we can do a lot of the things now that we were not able to do a decade ago. So a lot of people are now using social media. We're creating funnels and sponsored ads and hosting webinars to drive the investor leads and the investor traffic. I think from the investor perspective, what I'm hearing from most investors is they really now are spending more time conducting what we call due diligence, getting to know the people that they're having these conversations with, to make sure that those people that are coming to them for investment capital really understand the business they're in, have the track record, have the experience, and understand all of the things that come along with that. Because at the end of the day, you are a fiduciary for other people's money, and you should have the things in place that they would come to expect. At a minimum, newsletters every quarter for investor relations. At the end of the year, an accounting of profits and losses through a K1, and those types of things. And unfortunately, I think a lot of people try to get in this business, and then after they raise some money, they're like, man, now what do I do with it? Like, I've got this responsibility, and I really didn't think through all of these different things that I need to do on the back end of this relationship. So I always tell people as we mentor, let's set up your house of cards correctly so that you can scale this and not only raise a few $100,000, but potentially tens of millions of dollars over many, many years, because that's where the legacy and that's where the true transformational wealth is created. It's understanding the OPM game and realizing that other people's money will get you where you want to be much quicker than trying to capitalize that or doing it on your own.
Yeah, because a few years ago I was getting pitches and I'm listening to them, I'm like, this is not going to work, and yet these people are still getting funded, and I'm like, how is that even possible? But I haven't seen anything lately, so I was just wondering what the transition has been if people started taking it. We need to get back to the basics, and because a few years ago, as you know, it was just kind of, this is going to be a win, and not all of them were.
Yeah.
Are you seeing deals starting to come back in again?
Oh, absolutely. Yeah. Lots and lots of deal flow. We're actually involved in a couple of projects now. Good friend of mine just closed on a little over 100 units in Corpus Christi. He's still raising money on that, but got another $1 million to go. I'm actually involved in a deal here in the Houston area, moving forward on 16.5 acres. That's got 3 beautiful lakes on the property, and we're going to bring additional sources of revenue to that deal as well. But there's plenty of deal flow out there, and I think a lot of the deals that we're seeing are people that are kind of caught up in this rising rate environment. There's still some distress out there in the marketplace, and you can take advantage of that if you have the ability to raise capital or have investor backing you. But I think that you still have to be very selective, because a lot of the deals, they still don't pencil out. A lot of sellers, I believe, are still trying to get a little bit more than the deals are actually worth. But if you're a prudent operator and you know how to underwrite and you know how to stress test deals, there's still very, very good opportunities out there.
Okay. Now, are you investing too, or are you just raising capital?
Oh no, we actively invest. Yeah. So
You're
we have
acting, okay, right
two
alongside.
sides. We teach people and mentor people how to attract and raise capital, but I still actually raise capital and then actually also invest myself.
Okay. Now, where are you most active in raising your capital? Is it family offices, private individuals, sovereign wealth funds? Where are you finding the most activity?
So we're very active, like most people, of course, with just a high net worth, what we call retail investors, doctors, business owners,
Okay.
people that have discretionary income. But because I've been doing this now for many years, I do have relationships with family offices, small registered investment advisory groups, a few professional athletes, and then many of the people that we are, mentoring and consulting. They're also now navigating the broker dealer channel, building distribution with broker dealers. That is a far more expensive, much longer runway
Mhm.
because broker dealers that are affiliated with FINRA, which is, of course, the regulatory oversight body that most people are licensed to, they mandate a process that broker dealers have to go through to conduct due diligence. So it's a very lengthy, very rigorous process. Understanding that registered investment advisory firms, which are true RIAs, they have no FINRA affiliation. So for many of them, it's more kind of based on a gut check. We like you, you like us. We've met, we've gone through this process together to feel comfortable. And then usually what they do is they allocate capital to you. See, RIAs are very different than brokerage firms. Brokerage firms are in the transactional business. They get paid commissions to transact securities. I like to say that RIAs are allocators. They get paid by the client to manage their wealth. But as they see changes in the economy or they see changes in market conditions, they may move money out of those things into cash and then reallocate to other opportunities that present themselves. And so if you're in front of a small RIA at the right time, that money can definitely move in your direction. But that move could easily be a couple $1 million coming your way.
Okay. Now, you've raised $2 billion now, and so you've got some experience. Tell me about how you started. I think that's what a lot of people, they're really thinking that they're going to get their hands on some distressed assets. They want to raise some money. Where do I start?
Yeah. Well, realize I've been doing this now for well over 30 years. Where I started was, in my 20s when I was hired by this very small, oil and gas company that gave me structure and taught me a system and gave me a phone and a list of high net worth accredited investors. I think if anybody wants to start today and really learn how to raise capital, they need to realize number one, I need some tools. It's hard to raise money without what? Well, you need a presentation or a pitch deck on whatever you're raising capital for. You need to understand you need some legal side to the business, i.e., an offering memorandum or something to give to the investors that discloses potential risks. You need a website. So you need to spend some time on what I like to call the client facing side of the business first. But let's assume now you've got all that behind you, you're ready to go. The easiest way, really, I believe, to begin raising capital is either to leverage social media, like we talked about earlier, or just start networking. Go to Google and try to identify some investor clubs that might be in the area you live. There's clubs all over the United States where people meet regularly to talk about things like the stock market, crypto, real estate investing. And just by seeing where these are held and showing up, you start building relationships with other people that are investors. And once they learn what you're doing and what you bring to the table, it's sometimes very easy to say, hey, why don't we grab breakfast next week? Let me show you what we're doing. And then just continue to move the relationship forward. The biggest mistake, though, that we always see people make is they have a deal or they have something that they're trying to raise capital for, and they start talking to an investor about the opportunity much too prematurely in the process. And actually, the other person's going to say something like, well, Joe, it sounds like it could be an interesting project or deal. Can you send me some information? They're really saying that because that's the next logical thing after you're pitched a deal. And so, you send it and then you follow up, but they never open their checkbook. And really, the reason that they don't move forward is what they're subconsciously saying is, I don't know you well enough. You rushed the process. You really didn't give me the chance to get to know you well enough before you made the ask. And so part of the consulting we do with people is slow this down, give people the chance to know you over 2 or 3 meetings. Don't even tell them about the deal or the project. That can always come later at the right time, but give people the opportunity to really know you, because ultimately people invest with people that they know, like, and trust. And if you don't spend enough time on the front side of the relationship, you'll never get them to open their checkbook on the backside.
That's so true, Brad. People email me because I'm in real estate and I do investing. I'll just get an email and, then they do a follow up. Hey, did you get my email? What'd you think? It's just, they don't
Yeah.
understand. And it comes off, they're so anxious to get a deal done and they put this property under contract. They're going to lose it. You're so right about building the trust. It's something you
Mhm.
really, you've got to build that up ahead of time, and then start doing the pitch. Now, did you start with friends and family? How did you start?
I love that question. I have never raised a dime from a friend or a family member. I value relationships more than money. I know a
Yeah,
lot of people do, and I'm totally fine with that. But personally, for me, no, I've never raised from friends and family. Every dime I've raised has always been from somebody I had no prior existing relationship with.
okay. So
And
you
just
built,
because, I know business, I know sometimes things don't work out the way we hope they do. All the best underwriting sometimes gets thrown out of the window. I mean, look at the effect COVID had just
yeah,
on millions of deals and millions of businesses globally around the world. And I just never want to be the person that's at a family event where, I see my Uncle Bob coming in the front door and I have to make my way out the back because I lost his money.
yeah,
Same thing with a friend. So personally, I have not myself, but that's not to say that that's not a good place to go.
sure.
But just understand the consequences, of course, that can come along with that.
Oh yeah.
Yep.
Yeah, it's you talk about people, they start with friends and family, then they take, they go out to the investment community, say, listen, I've raised X amount of money from friends and
Yep.
family. So sometimes it works, but you're right. If there's
Yep.
nothing worse than Christmas, sitting across the table from somebody
Yep.
you lost money for.
Right. I think the other challenge with that, though, also is if you're making a life change where you've been in one career for many years and that's where your friends and family know you, like, you were, I don't know, a professional, a dentist, a doctor, engineer, salesperson, whatever. And now you're like going to them saying, hey, I'm raising money on this real estate deal. They don't know you as that real estate expert yet.
Right.
See you as this other person. And so it's like, well, you don't have any experience doing this. We know you for 20 years as this other person. And now you're over here trying to tell us you're raising money to take down a small multifamily asset or, do this. Come back after a couple of years of doing it where you've got the experience and you have the history. But people that do not know you, that are meeting you for the very first time, I think it's actually easier because you don't have to overcome that hesitation that friends and family might see. Now, the way that we diffuse that is you kind of put a team around you. You get an attorney, a CPA, and other experts that bring that prior experience to the table where you can say the collective experience of the team I've assembled exceeds 50 or 100 years, and we have this person on the team and this person on the team. But actually, I think that raising money for friends and family could potentially be a little bit more challenging because they don't see you yet as the expert
Right.
that you want to be until you've spent enough time in that lane.
Yeah.
Yeah.
How many deals? I mean, you're not just going to walk in. Your first deal, you're not going to get funded by a family office, are you?
No, not really, unless you have a team that has a lot of experience where
Okay.
all you're really doing is working alongside them as a co-GP or one of the team members where you can say, hey, I'm part of a team that has a lot of experience, and you open the door and maybe bring that other person in. So it's not out of the realm, It really just depends on, are you working with other people or are you actually doing something all by yourself?
Yeah.
The easiest way to get into this business is to hitch your wagon to an experienced team and say, hey, you guys are experienced. I'd like to learn how to raise capital. I think I can bring a couple $100,000 to the table and become one of the co-GPs. You do that 2 or 3 times. Now you've got your investor network. Maybe you've now got 12, 20 investors that have invested through you. You're the conduit into other people's deals. Now you find your own deal. You've already got investors. And so it becomes real simple on maybe that fourth or fifth deal where you are truly the sponsor. It's your deal. And now you're bringing in newer people that might be helping you to raise capital in a manner very similar to the way that you helped others raise capital for their larger deals. That's how I always recommend people kind of ascend into the industry. The other big secret with that is when you're finally ready to do that, don't go off and try to buy a 50 or 80 unit property. Go out and buy a 10plex or 12 units, something that's manageable so that you can learn the business. And then after that, scale up maybe to 18, 20, 24 units. Because I see people that get way out over the end of their skis and they get sloppy and they're like, holy crap, how do I manage 50 tenants and 50 checks and all the problems and headaches that come with this? 8 is manageable, 10 is manageable. And then as you send up, you realize, I got to hire an asset manager. Yeah, you probably should think about that. I got to hire a professional property management company. Yeah, you probably should think about that too, unless you like trash and toilets. So as you progress up the ladder, become more successful, you start to realize how these people manage, thousands and thousands of rental units. They're not doing it unless they're completely vertically integrated.
Right.
You've got the strategic resource partners that are the asset and the property management companies that largely do that for them.
Yeah, and you've got to watch out when you hire a property management company. You got to do a lot of due diligence there. But I want to get back to your pitch, because I think for an investor right now that's really trying to raise money, there's a big difference between a pitch to a private investor or a family office or a big fund.
Mm-hmm.
Walk us through your pitch to just a private investor in relation to a more institutional investor.
That's a great question. So I adhere to a thing called the 4-step blueprint or the 4-step process. And with that, there's something that works alongside that called the trust sequence. And what has made me, I believe, probably the leading expert on teaching others how to attract and raise capital is that it's based on a methodology. I think there's, quote, many other experts out there, I'm not going to mention who they are, that just say, hey, here's how I've done this. Do what I've done and you can do it too. That's really not true, because what works for one person may not work for somebody else. For example, if I said, hey, Joe, I can buy you a list of 5,000 high net worth accredited investors, names, emails, addresses, and we're going to mail to that list and invite them to now come to an event at an upscale venue. We know we'll probably get 60, 80, 100 people that respond, sure. And then you're going to come in, we'll have an LCD projector and a screen, and you're going to be in front of the room and you're going to present your opportunity. You may say, no way in hell. I'm not a public speaker. I got a fear of being in front of groups doing that, and I just can't see myself doing that. Well, the way that I've raised tens of millions of dollars, then not going to work for you. So we always have to find something that, number one, is within someone's comfort zone. But to pitch to a what we call retail investor, there's always going to be an introductory call or a meeting, or maybe a follow-up to how you met them at an event. And I call that the first date. It's just getting to know them. And so we ask a lot of questions, but what we do in that very first setting is we let them know, I have nothing to offer you today, Joe. I wish I did, but I like to give my deals to my existing clients and investors. And as a result of that, my deals tend to fill up pretty quickly. I just want to get to know you and see if what we're doing might be of interest. I just ask a lot of questions. Tell me about the best investment you ever made. And they do.
Yeah. getting to
And
know
so
them.
after spending 20 or 30 minutes in a friendly discussion and getting to know them, I say, what I'd love to do is just send you some information on us, follow up with you next week to answer any questions you might have, and just kind of move this process forward. So, 7 to 10 days later, their name pops up in my CRM system and I follow up. Did you get the information? Great. Again, don't have anything that I can really offer to you at this point. And I just ask a bunch of more questions because part of the burden, according to the SEC, is what we call the KYC rule. I got to know my customer. I got to make sure that if I'm going to be recommending an investment at a later date, that it's somewhat suitable for this person. But then at the end of the second call, I use something that I call the validation phrase. I want to validate that you're ready to move forward in this process with me. And so I say something like, Joe, like I told you right now, I don't have any opportunities that I can share with you, but I keep a list of people on my desk that have expressed interest. And man, I'd love to add your name to that list of people. So when I have something that I think you could get real excited about, I could reach back out, share the highlights with you, and see if it makes sense for you to take the next steps. Would that logically make sense for you today, Joe?
Yeah.
When they say yes, they're doing two things. They're teeing you up now to pitch to them, which is great. But at a very subconscious level, they're saying, yeah, I'm kind of ready to move forward in this process with you to the next steps. So what do you think I'm doing on that third call? Hey, Joe, just going down my list today, buddy. And after I spend a couple of minutes warming them up, I say, just so happens, man, I got a real exciting project we're working on. It's, 140 units in Orlando, Florida. And I just go down it very quickly. Can I send you the information? Sure. And that's when you send them everything. And then usually on the fourth or the fifth call, you're following up, you're closing them, you're welcoming them to your investment community. And you ask them, who else are you connected to that maybe we should also be speaking with to try to get referrals? And then you just repeat the process. So that process that I've outlined typically takes about 4 to 5 weeks to take someone that has no knowledge of who you are, a new relationship, to somebody that is now a check writer and a financial partner. Now, it's very different than going to a larger institutional investor or family office where you still want to use something very similar, but you can compress it a little bit because they are, at the end of the day, a professional investor and they're always looking for deals.
Yeah. Yeah. That's one thing that I really think that has happened over the years is just patience. We've got to be patient now because deals are starting to flow. We're seeing them. But it's like I said earlier, I'm just getting calls. They're sending me their offering the offering, and they're saying, "Listen," they'll do a call. Say, "Hey, did you get my email? What'd you think?" And
Right.
they're trying to close the deal right then. This is somebody I have no idea who they are,
Right.
and so I talked to them and said, "Listen, you got to slow your roll here a little bit. I don't even know you. How many deals have you done? So it's really, I think patience is a big thing right now. But building your team also, having the right team in place.
Yeah, absolutely. I could not agree with that more. You've got to kind of take the role of, looking at yourself almost like a broker dealer or a registered investment advisor. For example, if I'm going to take you or your fund or your deal and now share that with the clients whose money I manage, that's a pretty big responsibility because if that deal blows up, they're going to blame me. And I don't want to be blamed for losing somebody else's money.
Yeah.
Well, most people, unfortunately, don't treat their own money the same way that a broker dealer would treat theirs. And so I take that burden when people approach me and I say, oh, slow down, buddy. This is like dating, like getting married. If I'm going to marry you and write you a check, I got to get to know you a whole lot better than just going out on 1 or 2 dates. I got to know about your investor relations and what that department within your business looks like. So I know that I'm going to get a newsletter, at least at a minimum once a quarter. Got to know how you're handling all the accounting. Who's doing that for you? Do you have an outside relationship? Make sure I'm going to get my K1 at the end of the year. And then I make sure the most important is compliance. Who's your lawyer? What law firm are you working with? Are they just a general practitioner or do they have expertise in securities law? Are they drafting your private placement memorandums? all of these different things are so very important. And unfortunately, so many people are out there today raising capital that lack the knowledge in these areas. And that's where they usually end up getting in trouble.
Yeah, and the experience. There were people who were putting deals together, and there just wasn't enough experience there. And
Yep.
I know a good amount of deals that went back to the bank because of the structure of the deal. It just wasn't. And you got to watch out for it. We had a guy we sold property to, and he front loaded. It turns out he was not just a syndicator; he was a contractor, and he raised the money. So he front loaded everything. So he didn't really care about the property.
Yeah. Yeah.
So, but the thing is that he's in Texas, he's in Dallas, but he'll never. I mean, that was so short-sighted. He raised money for that one deal, and he's probably, I can't, if he doesn't go to jail because of some of the shit he did, but he's not going to raise money again. And you got to be thinking about the long term here. You got to think about the relationships,
Exactly.
And the thing is, once you land a family office or a wealthy investor, you could just keep going back if you perform well. And so you've got to really think about how you're going to perform well. If you're thinking about doing a one and done, not worth your time.
It's not worth your time. It's not worth the headaches. It's not worth the risk. I totally 100% agree. And, here's the question that I always get asked is, when should I be networking with investors? When should I be finding investors? Should it be before I have a deal or when I have a deal? The answer to that is you should always be moving people forward through this process, always nurturing relationships, always talking to potential investors. I equate it to climbing a mountain. If you have a deal that's now under contract, that seller expects you to execute and typically close within 60 days as you're doing your due diligence, your on-site inspections, and navigating all the stuff. But during that process, you're also raising money. Well, if you need to raise, I don't know, $2-3 million, and you haven't been doing this long enough where you don't have a huge database to go to, knowing it's going to take 4 to 5 weeks just to go through the quote warming up process to get a small group of people to write checks, chances are you're not going to be able to hit the target. But imagine if you've been talking to people, moving them forward, you've already got a large group halfway up the mountain that already know and like you. Now you can go back to them, and the call is that third call. Hey, we've been talking for a couple of weeks, finally have a deal. Now it's much more realistic. To raise a much larger percentage of that, you might need to bring in a helper or two that can raise some of that with you. But I always tell people, man, you want to be talking to people before, during, and after. So that you always have warm people to go to in the capital raising process.
Yeah, we've had a couple of brokers lately that has some multifamily listings out here in Los Angeles. And they want to raise money, but they're trying to tie the deal up, and we're like, no, we're not tying this property up with you until you have your money raised.
Right.
That doesn't make sense. So raise your money, then come back. Hey, you don't need the pressure of having to go out and raise the money, do your due diligence, all that together. Raise the money or get the money to where you got commitments, then do a capital call and say, okay, I've got the deal now, and then we can move forward.
Right.
But it's tough to get people to, and these are a couple $1 million deals, so they don't have to raise a ton of money, but you're seeing it out there. But I think that everybody's kind of sitting and thinking that deals aren't happening right now, and I'm seeing them; they're happening.
Yeah.
I talked to a young agent this weekend, and he's got 4 deals going. Now they're all cash, so they don't have to get financing, but deals are happening around the country.
They are. We just did a event in San Antonio. We had, 40 attendees from all over the United States. And, the focus of the event was obviously multifamily, bringing in a good friend of mine that is a very great sponsor. And I came in talking about how you attract and raise the capital for these deals. But everybody in their room was talking about the deals they're working on, whether they're ground up developments, whether they're value add. We're looking at a deal that we're underwriting right now that's down in the Daytona, Orlando area. We're over 100 units down there. So there are definitely deals out there. Now, with that being said, will every deal work? Maybe, maybe not. A lot of the sellers still have unrealistic expectations. And when you underwrite them, you have to look at the deal, obviously, through that magnifying glass. but there's still plenty of deals out there.
I agree. Now, there was an article this morning. I saw the headline. I didn't read it, so I didn't want to talk on it too much, but they're talking about kicking the can down the road. So, these banks are extending these loans 6 months to a year. Mm-hmm. What is your outlook for a year from now for investments?
I think investments are going to actually be in a better position. I think that, going forward over the next 12 to 18 months, interest rates are going to stabilize, or better yet, actually notch down a little bit. Obviously, we're going into an election at the end of the year, and I think that's largely going to dictate what things look like 2025. But I think going forward, you're still going to see a lot of deals in the market that are basically being brought to market from sellers that need to get out of them to pay down debt on other deals that they currently own in their portfolio. We're looking at a deal right now, for example, 3.76% interest only agency debt with 9 years left on the term. Well, going out and doing a new deal, I can't borrow at 3.76. Even agency debt's well above that. But that's another deal that's available. And more than likely, it's probably being brought to market and brokered because they need to get out of that to take the equity to pay down some debt, maybe in another deal that might be somewhat stressed. We're looking at a deal right now where I can't believe it, but the owner of the property's got an SBA loan on it. He's paying about 10%. And I said, man, that's killing your cash flow. I said, if the current bank that's basically holding that for you won't refinance, just take that and transfer that debt to another bank. He's like, you can transfer debt from one bank to another? I'm like, yes. Go find a friendly local regional bank, find out what they'll basically take that debt and refinance it to. It might be 5.5%, 6%. That's a heck of a lot better than the 10% you're currently paying. And so just being somewhat knowledgeable of the industry and understanding, how banks work, how debt works, can be real helpful in opening up discussions with sellers as well as with investors. But I think that the horizon over the next 6 to 12 months in terms of the deal flow and what we're going to see, it's just going to become better and more attractive.
Yeah, I think it's a good time to, start building your connections. But education is a lot of it. Really understand. 10% on an SBA loan. Wow, that's
yeah.
But yes, education is the key. And if you've got to be, when you go in talking to these investors, they're pretty sophisticated. You better know what you're talking about. So education there's no excuse.
I agree. Absolutely.
You got to teach yourself. Well, Brad, thank you very much for coming on today. I appreciate it. How do we get in touch with you?
Well, there's actually a couple things your listeners can do. Number one, we would invite everybody to go find me on Facebook and or Instagram. On Instagram, it's Brad Blazar, and my last name is spelled B like boy, L-A-Z, like zebra, A-R. I'm the only one there that's got that little blue check to tell you that it's me, because we have had a couple of people that have cloned my account trying to steal listeners and viewers, but just make sure you find me with the blue check and you'll know it's me. The other thing is invite you to come look at our website, just bradblazar.com. There you can see all the books that I've written that are available. We send those out to you. You can listen to my podcast, The Capital Catalyst Show, where we talk about raising capital, doing deals, and most important, come actually meet me in person at one of our upcoming boot camps. We're hosting our next boot camp in beautiful Scottsdale, Arizona on May the 17th and 18th. We got professional speakers like securities attorneys, capital raisers, people that represent the broker-dealer industry on the due diligence side. And so it's a great place to create the proximity with other people, which, like you said earlier, is how you learn and how you grow. A lot of people that want to get in this have the limiting belief that, will this work for me? And by being in the environment with other people that are actively doing it at all levels, you start to realize they're no different than me. Only difference is they just took action. Yeah. But the other is, if you're lacking a skill, the boot camp is where you can find that. We've had many people that have come to our boot camps that have literally formed strategic partnerships that today literally own tens of millions of dollars in real estate, because they said, look, I have no problem finding the investors. The other guy says, man, I'm a numbers dude. I love underwriting and finding deals, but I'm not really, quote, that investor facing person. Well, great. Let's get together. You find a deal, I'll find the investors. They hitch their wagon to each other and they move forward with the creation of a new LLC. And now, many of the people that actually meet through our community are doing deals together. So that's the thing I love about transforming people's lives, creating an environment for change, and really teaching people what I believe is one of the most important skills, and that's how you attract and raise capital so that you can build, buy, scale the business, or as I like to say, do something much bigger with your life.
Yeah, and I think, the what you're creating also is just a great network for everybody to be part of. So
I love it. Thanks.
actually, I'll just put your website below the video so people can find it, and so they can click on it and see. But all right, well, thank you very much, Brad. Appreciate it. Great information. We'll have to get you back on here soon.
I'd love to. Thank you so much for hosting me today.
You bet. And for those of you watching, if you could, please give us a like. And if you haven't done so, make sure you subscribe.